Investors digesting an important new report on the state of home prices in America. CNBC's Diana Olick joins us right now from Washington with all the details on it. Hey, Diana.
Hey, Tris, and let me just preface by saying that home prices always lag sales on the way up and on the way down. So we were expecting this drop in home prices, but we thought it would come a little later. These numbers are for July, right at the end of the home buyer tax credit. But the report showed a big revision to the downside for June. According to the FHFA, which governs Fannie and Freddie and puts out this report, the unusually large revision reflects data from late June that show considerably weaker prices than earlier in the month. So then we get the full numbers for July. Prices down 0.5% month to month, down 3.3% year over year, and really steep declines in the mountain region and the South Atlantic. The overall numbers were lower than many expected. Patrick Newport of IHS Global is revising his further price drop over the next year from down 8 to down 10%.
We think that the housing market, the housing prices are valued fairly right now. In fact, they may be undervalued right now, but they're undershooting on the way down just as they overshot on the way up for a number of reasons. Demand is weak, but also we have a big foreclosure problem, and there's a big glut.
And that weak demand he's talking about, more evidence of that came today in the weekly mortgage applications number. Apps came in down 1.4% overall, with the purchase index down 3.3%. Refis, while also down, now account for 81% of all applications. That's up from last week, and believe it or not, that is very high. We're going to talk more about prices on the blog. Go to it, realtycheck.cnbc.com, and please forgive me, but I am tweeting now, Trish, Diana _Olick.
Ooh,
I'm sorry.
Great. All right, well, send me a message. Send me a message. I'm Trish _Regan. So we'll go back and forth, Diana. We'll have some fun.
We're both guilty.
Okay. Big question here, thanks, Diana, is how will home prices, or when will home prices stabilize? Is it now a good time to buy? Joining us right now with some answers, Shari Olefson, real estate attorney and author of Foreclosure Nation, and also Olick Charfen, CEO of Distressed Property Institute. Alex, I'm going to start with you. What do you think? I mean, are we seeing any signs of stabilization at all?
We are seeing positive signs in the market. We're not seeing a short-term sign of stabilization in pricing, but what we are seeing is that there are mitigation efforts that are occurring to stop foreclosures. And you mentioned earlier that there's some other factors that are affecting home values. One of the major factors affecting home values today is the incredibly high number of people not making their mortgage payments. We're still in a market with about 14% of people not making mortgage payments. The more we can mitigate those issues, prevent properties from going into foreclosure, we're going to see pricing start to stabilize.
Sherry, give me the big picture. I mean, are prices going down or up? There are markets where prices have gone up. I thought we had already bottomed. This report shows something different.
Absolutely. And I'm glad you pointed that out, Melissa, because you know what? I'm a lot more optimistic in terms of where the bottom's going to be than a lot of people. I'm less optimistic in terms of how long this is going to last, though. I think that at a maximum, we're going to see another 3% depreciation. And the reason for that is that if you look at home prices in terms of a normal baseline, in other words, if we stop looking at month over month or make ourselves crazy looking at year over year,
right,
and we look at the last time prices were normal, a lot of areas have prices which are exactly where they should be now. The other thing is that I have faith in the traditional real estate valuation methods, which we completely ignored during the bubble, like replacement cost. And I do believe that some of those valuation methods will put a bottom at this. Well, but in terms of how long it's going to last, go ahead.
Well, I'm just curious what it means for your average person out there, Sherry. So if you're saying, okay, I think I could get X number of dollars out of my home right now, are you wise, Sherry, to go ahead and sell it now and just kind of wait and maybe hold on to that money and then buy something if prices, in fact, go down further?
Yeah, I don't think that the fear of prices going down is a reason to sell. But I do think that if someone's holding on because they're waiting for the prices to go back up, it's going to be a long time. Because if you just look at the numbers in terms of our absorption rate, it's fundamental supply and demand. We have way more supply in the pipeline now. We've got 12.5 months normal inventory. We've got another 7 million in shadow inventory and another 7.5 million in default or foreclosure right now. Those numbers are huge on the supply side.
Yeah.
And the demand side side is down. We've got all those people who have been foreclosed who are out of the market. We've got 15 million unemployed who are out of the market. We've got 24% underwater. They're out of the market. So it's going to be a long time before that gets absorbed.
Hey, Alex, if I'm looking for a way to invest and make money, it seems like rentals are where it's at. Whether I could buy something and rent it back out, whether I could invest in a REIT that primarily focuses on rentals. I mean, is that right? And how do I do it?
Yeah, there's no question. You know, real estate is doing something that it hasn't done in a long time. Cash flow. And even in cases where somebody is paying 100% cash, we're seeing cash-on-cash returns of 8, 10, 12, 15% in some markets due to how quickly some markets have gone down in value, and the price inertia has pushed them further down in value than where they really should be.
So how do I capitalize on it?
Well, we go out to the markets where pricing has come down far enough that now we can purchase a property and cash flow. And as an investor, about 10% of all properties today are being purchased cash. 20% of all properties last year were being purchased by investors. You go out and you find a property where the rents...
And rent it.
Yeah, the rents provide you with enough cash flow to have cash-on-cash returns that are more positive than what you can get in the market today.
Okay, I like that angle. Thanks, guys.